Okay, welcome to the Swing Trading with Cycle channel. We're going to do an update on precious metals tonight. This is October 29th, Saturday night. So we have a full weekly candle for the last week of October, really, and we're going to start the first week of November. We're going to see that, first 4 trading days of the November candle. So very, very exciting. And definitely take a look at the links in the description. You'll want to check out the broader market update because I think that is going to massively affect precious metals prices. We'll start with the daily chart. We'll start with gold. And again, it is October 29th. We are coming up on the Fed meeting and announcement next week, November 3rd, I believe it is, or November 2nd, maybe, Wednesday. So this daily chart for gold, yellow is a 200-day moving average. And here's the thing, and we talked about this in the previous video for gold. If you haven't seen that, definitely take a look at the link in the description. But we had this low on day 19 for gold, right here, right? This candle right here. And then we had this little rally to day 5, like really strong rally. I mean, look at these green candles. I mean, these 2 days, well, let's zoom in here. Let's make sure we're like looking at we're all on the same page, right? Like, look at this rally here. Like, obviously, these 2 days were tough to stay long. I mean, especially this day, God. But, like, in context, right? If you were just kind of thinking about the bigger picture, nice little rally. But then you just literally gave it all back. And then you made another low. That was day 18. So, like, from the period from here to here was 18 days. Now, you could say, well, if we just combine those, right, so fine, it's 37 days, right? You could say that. But since that, we tried to make this little move up, and now we have a swing high, right? Below this level here is a swing high. I hope you're seeing that because, like, that's part of the education on this channel, right? Once you make a higher high and then you cross below the low of the candle that made that higher high, you now have a swing high. That is bearish, right? That gives you a supply zone, a ceiling of resistance, a potential supply zone, potential ceiling of resistance, right? And so here, that is below the low of this candle, which is 1649.84, right? So we're not too far below that right now. And again, I always talk about this. It's not levels, but zones. So you have to be cognizant of that kind of idea. But on the whole, this is not great. But more importantly, where does it set up for day 6 to open for Monday, right? And really you'll start trading tomorrow night, Sunday night, right? And again, at some point, hindsight is 2020. This will maybe be reimagined into a different cycle count. That doesn't matter. It's more the price action. This is bearish, right? When you give back all of this, when you do this kind of rally and then you give all of it back, that's bad. Right? Like, doesn't matter what the cycle count is. Now it's a question of, does this surprise us to the upside? And we'll see. If we get some kind of crazy swing low on lower time frames, that'll be what we need as a prerequisite. And on the weekly chart, this again, we had like this crazy decline where it's like, okay, well, you could say this was a weekly cycle low, and maybe it was, right? Who knows? It's not like these are some kind of absolute things, right? And then this was your little feeble rally, and then we collapsed. But if you interpret this whole thing as one weekly cycle, and this was your week 31 low, and this was your war-fueled rally, right? You moved all the way up here. Again, it was a double top in the sense that actually it was a lower high. So we didn't even make, not even like a marginal little higher high. We missed it by like $5. And then we collapsed into this week 31 low. But then this was like a really feeble rally as well. It did close above the 10-week moving average, which is one of your quote-unquote criteria for a weekly cycle low. But it was just a week 3 high, so like pretty early decline, like ICH, right? Like weekly cycle high. And then we declined really hard into a week 10 low. And then we bounced. But then we got this massive rejection, price rejection, right? This wick is a massive pullback on a lower time frame. That's what that means, right? The same, a lower wick is a massive rally on a lower time frame, right? This is just price rejection. We got up to that level and we said no. And then that next week, We got rejected further. Please notice that is your swing high, right? Like that's important to understand. Below that level right here where I'm drawing this line, that's your swing high. Right? Like you went this, and again, this is a swing high below this high, below this high, below this high, below this high. That matters. We're making lower highs. That's literally the definition of a downtrend, right? And then we made another lower low that next week. Not lower than this one though, right? Like this week 10 low so far. And then we sprung back up, but now we're declining again, and we closed obviously, so this week is over. So that was ostensibly week 14, you could say, right? And so perhaps this is all, again, just one weekly cycle that's still declining, right? That topped out on week 3, and that's always ugly. When something tops out on week 3, that generally means it's going to be ugly. Because weekly cycles just on the whole tend to be in the 20-week range, right? Like they can vary wildly. Like they can be 30 weeks, which is obviously way more than 20, or like 15 weeks, which is quite a bit lower than 20, right? But if you top out on week 3, that means you're setting up for a pretty massive decline. And that's what we saw. Now it's a question of, is that over? Is this just like a frustrating consolidation before a move up? That's what remains to be seen. So that's the weekly. And then most importantly, on the monthly, we're really tracking that long-term cycle, which is the sort of, call it 7 to 8 year cycle on gold. 7-year cycle would be 84 months. 8-year cycle would be 96 months. This is month 82. Notice the massive red, and I keep mentioning this, important to note. We're just making this move down like this. Wouldn't be surprised to get something like this and then like that, right? Like we have just made a precipitous move lower. So would not surprise me that we get a little rally up first and then a move higher. Or excuse me, a little rally up and then we make the final low. Could be that we make the final bottom after that little dip lower too. Who knows? We have to be open to that, but there's also like, we're just now flirting with the 50-month moving average. Notice every previous 8-year cycle low did get below that, except the most bullish one ever, right? So that's what you have to think about, right? Like look at all these other ones. Do you notice that? That's pretty clear, right? And again, the moving averages, again, they're a very lagging indicator. That's not something you should trade on in real time, assuming you want to get in on the trend early, right? Like don't wait for some kind of moving average crossover. But notice that every single case, except this, the most bullish ever. Now, maybe we're thinking that somehow this cycle is more analogous, like this current cycle is more analogous to this one. I don't know. I suspect we're going to spend some time below this thing, and it's going to probably decline a little bit. Like, and again, in this cycle, it didn't even, because in a way you could say this was one big bullish cycle that was like, 16 years versus 8 years, right? Like, because cycles are always nested within each other. So that does raise some interesting questions, right? Because if this is your 16 year, and then it's like, okay, well, this is actually just half of a bigger picture that's symmetrical to this. Yikes. That could portend a lot lower, but there's no reason to think specifically that we'll get there. But we'll watch the price action, as always. And if we go to silver, we'll just look at the monthly chart. Notice a big difference, right? Gold was very red. Silver has actually been green the last few months. That means literally silver is outperforming gold. And we'll talk about the GSR, the gold to silver ratio, later. And so silver is trying to make September a monthly swing low. It got above that level, but then it pulled back hard, and we have this ugly doji thing that we're going to do for the October candle. Obviously, not much room to change that because we have literally 1 month to trade, or excuse me, 1 day to trade for the rest of for the monthly candle to close. So we're going to have an inside candle for silver in November. That's important to understand. We know that, right? And let's get rid of these lines here. Let's simplify things. That's what we know, right? That's it. That's the range we're going to need to get out of, right? Between 21 and 19, just call it. That's a pretty wide range. So about, what is that? Like, so like $2, right? So we'll see what happens Monday, but either way, we're going to open somewhere around here, and then we'll see, do we bounce around here? Do we get significantly higher, significantly lower? It does makes things a little bit easier. And on a daily sort of level, silver had the same kind of bearish move that gold did, right? We had this massive rally, which was very impressive, but then we literally gave it all back, like literally gave it all back. Like, I mean, so excuse me, not literally, not all of it, but like, well, we didn't go below this low, right? So like, I mean, but we then started a little uptrend here on the daily, and now we've also made this slight swing high here, right? You can see similar to gold, same pattern. So a day 8 high so far. Could be that we're going to get a left translated daily cycle. This thing is going to fail below here. We're going to see. That's what we're going to watch for. That's what we're guarding for. Watch risk. And when you think about the weekly cycle, this thing has a high on week 5 so far. We had this really big bearish candle. I mean, look at that thing. My God, what a monster. Below that level is a swing high. I hope you're seeing that now, right? Because this candle made a higher high. Like, look at that. I mean, it made a high above here and was green at one point and was very bullish, but then obviously pulled back hard. And then the next week we just went wham. Like below this low makes this a swing high. I hope you're seeing that, right? And then we consolidated that next week. And then this week that just closed is still consolidation. Now, that's an important concept. It's a little bit more advanced. We did make a higher high, but then look at that. We pulled back hard, and then we made this lower low, and then we came back up here. It was a doji-ish, right? But on the higher end of the range, right? We didn't get, like, if you think about the range of this candle here from this week, we stayed above, like, you know, more or less the midpoint, like just kind of eyeballing it. So that's interesting. And the same way that November candle is going to open as an inside candle, the weekly candle for next week is going to open as an inside candle, most likely, right? Given the shape of this candle. That's an important concept to kind of understand. And that means that gives us even clearer levels, doesn't it, right? Like it's the range from this week, right? So this week had a high of 1977 and a low of 1880, right? So that gives you your sense of like the levels you want to be really watching out for. So that's silver. And finally, we will look at GDX. So GDX made a high on day 22. Pretty bearish in that it's a double top, which is kind of like a triple top kind of thing in a sense. But then we had this gap down Friday, and then we kind of tried to rally back. But we didn't even get back to the low from Thursday. So that's not a great sign. We are still above the 10-day moving average, and that's sloping higher. So that's interesting. And so I could see a world where this will drive itself higher. Let's see what the other higher time frames look like. Right. So this is week 4. And you imagine we're going to try to test this $26 area, and we're here at $24.72. So that could be interesting. Now, we could get massively rejected by it. We could even make it all the way up to 28 and then even still pull back from there. So there's a lot of room for it to make a little move to the upside and for things to still turn out kind of bearish. And I mean, my God, look at this doji of a candle. So very similar to the silver candle in a way, but like even more doji-ish. Like we had this excursion up, this excursion lower, and then Jesus. So November candle is going to be an inside candle for GDX as well. That's important to kind of note. And just, well, I'll mark those levels. So what are the levels? So high of 26.11 and the low of 22.49. So that's a pretty wide range, like almost like $3 almost on a $22 stock, like 10% ish, or more than 10%. So that is important. Those are the levels. That's the way to kind of think about it. To be data driven. Don't let the emotion kind of whipsaw you around. There are very clear levels here. I would say we may be setting up for a little bit of a burst higher, but that could be a selling opportunity ultimately, especially if you look at this this yearly chart here as an example. Look how far below this yearly low we are, right? Now, last year's low was 28.74. This is GDX still. So we're still a full $4 below that low. That's like 20% from here to the upside. So maybe we even actually, make a move all the way up there before we kind of fail. But those are kinds of reference points you want to keep in mind, right? Like that's why I'm, I'm not chomping at the bit to go long something that is in such a sort of massive downtrend. There's no reason to take on that kind of risk. For me, at least, it's a personal choice, obviously, for everyone. But thank you for watching. That is our update on precious metals.